Hey guys, welcome to the next video. This is the low time frames ranges. Let's see what it means. Now, ranges and low time ranges has the same definition as the high time frame ranges. As its name says, it's in low time frames. Okay, so again, there are impulses of low temporality that are taken into account to understand the direction of the market or the price. It is composed by fractals that repeat consecutively. The ranges are effective for 4 hours, 1 hour, 15 minutes, even 5 minutes, but I would take that as a consideration, right? Just 4 hours, 1 hour, and 15 minutes, right? So this will determine the direction of the market just in these time frames. This is something we have to bear in mind. Then we're gonna learn how to mix time frames, which is key for this strategy, but we just need to recognize first the low time frames ranges. Now, we will have the same concepts of strong high and strong low. So just to remind, a strong high is created in a bearish trend. It needs to have a liquidity taken above a high and the break of the structure of the swing low. And then the strong low, which needs to be in a bullish trend. It needs to take the liquidity of a low below. It needs to take the liquidity below a low and the breakout of the structure. Just like in this example. Again, swing low is created, right? Then it takes the liquidity of the low below, and this new low will become the new strong low, and for that moment upwards it will be a bullish trend. As this example, it will be the same but in a bearish scenario, and it will be a strong low but it will be a strong high. We will just revise the same concepts of a swing high, a swing low pattern. Remember that the market is fractal, so it has fractals, so it means that it will repeat the same candlesticks or the same patterns even in high time frames than in lower time frames. Okay, and again, remember that this is a three candle pattern, which the wick of the middle, right, must always exceed the one on the right or the one of the left. No, and the one of the left, no matter the color. Okay, the swing high is the highest part of the price, the swing low is the lowest part of the price. For what it is used, it helps us to identify the true start or end of a range, and then the liquidity taken and the boss means that the liquidity intakes can be with the candlestick body or a candlestick wick, but the breakout structure must be with the candlestick body. Okay, this is just remember, it's a small reminder of the concepts that we already know. This is the pattern that we practiced in the previous video, and we're gonna keep practicing on this module now because they are identified exactly the same. All right, so we will have to identify a swing low, the lowest part of the market, a swing high, the highest part of the market, and from that, when we found that small consolidation, right, then we will have just to take decisions and wait for the liquidity taken and then the break of the structure, same as in the previous content. So the swing high is created and then the swing low is created. From the swing low, the swing high is broken or the liquidity is taken, right? Finally, the price breaks the swing low with the candlestick body, and then the new high becomes the strong high. This will be an example of a strong high, something that we saw in the previous module. Okay, so but it will work the same in low time frames, and it will be the same for the ending of a range. Okay, so same story. Imagine that we just keep observing the downtrend, and then the swing low is created, then the swing high is created. From the swing high, the swing low, from the swing high, the swing low is broken, the liquidity is taken. And then from the swing low, we wait for a bust, break of structure of the swing high. Okay, and that would mean that we have a range completely ended. Okay, this is something we already know. Okay, this new low in this example will become a wick low if this is a bearish trend line. Okay, as we saw in the previous video, again, wick low. If there is a strong high, it is understood that the market direction is bearish. Therefore, all the lows that are made will be wick, high probability of breakout until there is a change of direction. That's it. This is something we're gonna see today. And the same with the wick high. So if there is a strong low, it's understood that the market direction is bullish. Therefore, all of the highs that are made will be weak, high probability of breakout until there is a change of direction. So this is something interesting. We're gonna stop here this before we saw the example. Okay, when do we have a new range? This is something interesting. So the breakage, which is something super important. There must be a breakout of the wick low or wick high, okay, of a pre-existing range. This last one must have correct and a clear ending. When the wick low or the wick high is broken, then it will be the beginning of a new range. Okay, in other words, look at the next. Here we have an example of a range. Okay, the swing high is created, the swing low is created, then have the liquidity that is broken by the candlestick boss, and then we have a weak low. Okay, now we will see an example of how we have to update a new range. So based on our observation, correct, this will be our swing high, this point I am highlighting here, and this will be our swing high, swing low and swing high, right? In order for this to finish the range, okay, this will be broken with a candlestick body, yes, and then we will have a completely range ended, right? So, but in this scenario will happen two things. One is that the market continue pushing up and change the market direction, or two, this is what we're gonna see, creates a new range, a new bearish, in this example, bearish impulse or bearish range. So now let's see. So in this case, we're seeing that, for example, the price get to this point, which is this will be the swing high, had a small reaction, but then it makes the liquidity taken, right? It has taken the liquidity of this swing high. Pay attention at the next. The market now has created a swing high, which will be this one, and then we will have a swing low, right? Yes, we will have a possibility here that the market either continue going up or create a new strong high. So what happened in this case is that we apparently we have a boss, right? The breakout structure, and even we can have it with a candlestick. But what would determine that this is the ending of the range? A breakout structure. Excellent. Now let's wait for the next move of the market. From this point, the market do the next, or that's the next. The market goes down and take the liquidity of this low, but it does it with a candlestick body. What is the meaning of that? It may be the beginning of a new range. Okay, look, it go up, doesn't have enough strength to keep going up, keep pushing, no, go downs, and then it just broke the weak low. That's why this is called a weak low, right? Now we just update, okay, or range, and this will become our new strong high, correct? And it will keep pushing down. Now this is likely to happen in low time frames. Remember that we're watching low time frames, correct? So imagine that this is just like 2 days. This is one day in a day in a daily time frame. This huge impulse is just one red, let's say, or a bearish candle. This next day is a small one like a hammer candle, and then we have another red candle, a bearish candle here. That's imagining this is a daily time frame. In lower time frames, that's what will be as something that will be keep seeing every single moment. Okay, and we need to be very smart to recognize when the market may either go up or go down. Why this is key? Because we just need to wait for the boss, okay, for the break of the structure, and then see if the price keep respecting this, right, and breaks the weak low. That's why it's called weak low. Okay, so some question will arise here like, okay, so when does the price stops of going down? It's a question we're gonna solve in further videos with, but I'm gonna give you the answer with the supply and demand zones. Okay, so patience until that topic. Perfect. So now we just update our market. That's it. We just update our lines or drawings, and we just keep making decisions. As simple as that. Okay, this is how it works. Now wait, now when does a trend change occur? Okay, which is the next scenario. So I just showed you the scenario in which the trend line was bearish and it keep continue with its movement, right? But now we're gonna see when the range changes, okay, or the direction changes. So look, the range breakages. So this is important. The range, so this whole impulse is just okay. So there must be a break of this strong high. Pay attention, not the weak low, but the strong high in this example. So the highest point of the market. It must be a break of the strong high or strong low, in this case in the strong high, and it has to be yes or yes with the candlestick body, right? It must be with a candlestick body. Now we just have to make a range update. With the new strong high or low, we must understand which market direction are in, and then we make decisions. Okay, we make decisions. So we have an example of a completely ended up range, which is as something you already recognize. But look at the next. All right, in this case, the price just keep pushing up, right? So what does it mean? That the price break up the structure, but it never break with a candlestick body to keep pushing down. No, you just keep doing fractals, Polish fractals, let's say. Then it keep pushing up, it kept pushing up, and then boom. So in this point, most of all traders, so most of us in certain point of our lives as a traders, we would determine here a bearish a sell point, because probably we would imagine here like probably a trend line, maybe trend line here, correct, trend line, and that because of that we put sales here, we just keep selling here a double top, or most important here and here people will keep putting getting or having orders or positions to sell a double top. It will work, right, fortunately, and then is broken. The strong high is broken. Okay, that's it. Then we just have to update the or chart. Okay, now this strong high is eliminated. We just don't take that. We don't take it as a consideration, right? We now the new high will come a weak high, and the one who was the strong the weak low becomes the strong low. Why? Because it just took the liquidity of this high or strong high, right? And now we just have updated or range. Now we don't work with this range, but we work with this one, okay? And we just keep, and this is a constant exercise as a traders we have to keep doing every single moment in the market, right? So we're just updating ranges, and then we just make decisions. So again, we analyze the beginning of a range, perfect, and then the ending of the same, okay? We will wait in this point the same. Probably it will keep going up, or it could keep going down. So this will be just a holding pulse. All right, guys. So that was like the theory. Okay, interesting, right? What we're gonna do now is the next. By the way, you have questions, do not hesitate or keep watching the questions and queries videos that we have here. Now we're just gonna, if you have more questions, revise the presentation. Probably if you don't like the way I read, you can just pause and read on your own. And next, I always let you homework, which is identify 10 ranges or more in 4 hours on 1 hour time frame. Okay, and we have to highlight the swing high and the swing low and the bust. Okay, also if you want to make exercises of how it is broken, or when a change or when a range is broken, that would be lovely. That would be a really great example, okay, or a really great practice. All right, for the moment, this is all about the presentation. It's time to go to the market.
Guys, for a while, stop. Question: why are you not subscribed to this channel? I am providing you the best smart money concept strategy ever explained on YouTube, and it's free. So subscribe to the channel, which is also free. And with that being said, let's continue with explanation that you come here to see. Let's go.
Right, guys, now here we are in the market. Let's see. This is, if you can see here, we are in a daily time frame. Okay, and we're just gonna try to work with the most recent range, okay, or impulse of the market, right? Just look at this range that you're seeing here, which is a daily impulse. Okay, look at this, from here to here. We're not gonna view this is a just really quick analysis. Look, here is the swing low, here is the swing high. From the swing high, the liquidity is taken, and then break of structure. What does it mean? Correct. This is the strong low. Muy bien. Very good, very good. Yes, remember that I'm from another Spanish country. Perfect. Now look at the next, my friends. The liquidity here, and we have here this. Perfect. Strong high. Now this is in a daily. This is a daily time frame. But look, if I put 1 hour, the same impulse has lots of ranges in 1 hour, lots of them, right? So that's why we need to understand the direction of the market. But let's do the next. We're just gonna analyze the beginning, how a range ends, and how it starts again. Okay, this is something the homework will be about, right? So this is in low time frame. We're analyzing here. Look, this is the swing low in daily time frame, and this is the swing high in daily time frame. In 1 hour, it's a complete impulse, right? So let's analyze this. Perfect. And just ignore for a moment that this is the swing high, the swing low in daily time frame. Perfect. Because this is the lowest part of the market, we just put here the low. We already know this is a strong low, right? And just to validate this is a strong low, we have to recognize the swing high and the swing low. Here is the swing low. This is the lowest part of the market. Here it is. Perfect. This candlestick is lower than the one of the left and the one of the right. And now we have to analyze the swing high, which is this part. Okay, and this is the highest part of the market in this consolidation part, right? And this candlestick is higher than the one of the right and the one of the left. Correct. Now from the Shanghai, the liquidity is taken. Then you just keep making some movements. You will be until this point. We would think it's bearish, but then boom, it made the bust. Okay, so it's completely confirmed. Okay, a new range. Okay, now we're gonna try to find the ending of this range. Okay, so let's keep watching the next fractals. So this is a high, a weak high, and then the price, what happened with this weak high, just took the liquidity. Perfect. It goes down. This apparently maybe this could be a swing high and a swing low. But what happened? The price took the liquidity, yes, but then it didn't go down. Just keep going, pushing up, and it kept pushing up. Right now, in this will be then or strong high, strong, no, it's not a strong high, but or weak high, right? Or the end of the range. Okay, why? Because here is much more clearer the swing high. So look, this will be the swing high. Again, is the highest part of the market. This candlestick is higher than the one of the left and the one of the right, and then we have to analyze the swing low, which will be this one. This one will be the swing low, right? Here will be the swing low, which is because this is the lowest part of the market, and is this candlestick is lower than this one in the left and that one in the right. Okay, so from this point, the liquidity was taken of the highest above, and then from this point downwards, we wait for a pause. Okay, so when you saw this movement, that was in that moment we may think is still bearish. Why? Because there is no break of structure. This is just with the candlestick wick. Okay, it keep pushing up and then slowly but steady break of the structure. So when it make the boss break of structure, then we'll have here a complete range. Okay, so we'll have here or strong low, and this will be or weak high. That's something we said because this is a, I'm gonna erase this because this is a bullish trend. Why is it bullish in 1 hour, right? In 1 hour, why is it bullish? Because what is determining the direction of the price is a strong high. That's a strong low, excuse me, right? And a strong low, which is this one. This is strong low is determining the direction of the market in this time frame, 1 hour, correct? Then we will have this is the weak high. Okay, and until, remember, until, or in which point, in which point we determine that the direction changes. When? Perfect. When the strong low is broken by a candlestick. Strong low or strong high. In this example, it will be the strong low. And this is what happened, right? In this point, right? We went down, right? The market went down. It took the liquidity of all the people who were selling here. Sorry, excuse me, buying here. So for example, imagine next, we're gonna see this topic later on, but the trend lines, right? People think that when a trend line has, let's say, it touches the trend line 3 times, in the third one, it will have a correct movement. But no, one, and here it will be many people buying. At this moment, there were many people buying. But what happened with their stop losses and their accounts? They were just completely broken or lost. Perfect. So at this point, this is just liquidity taking. We still think this is a bullish trend line. Why? Because there is no break of the structure with a candlestick body until this point. In this moment, we would know the trend line has the direction of the market has changed at least in one hour, right? And now we're gonna create the range update. Okay, so once we saw this, will become erase this. No, I'm gonna let it here, but perfect. Now this point will become the boss break of a structure. This is the lowest. This is the swing low. This is the lowest part of the market. You can see it here. The candle wick. The one of the left is higher and the one of the right is higher. So this will be the boss. Yes, just 3 candles, boss. And this will be the swing high, definitely. Swing high, perfect. And now this will be our new strong high. Okay. This will be our strong high. Strong high. That's it. Now we have a new range update. And what does it mean after this break of after this boss? Well, that we will keep looking for, in this case, supply zones to sell, but we're gonna see that later. Now we will keep thinking now, not buying, selling. Okay, people would think, no, look, it's still bearish. Look all this. Look this huge impulse. It's not possible that this trend line will go down. They haven't been able to perceive the market shift. Okay, this strong low becomes now a weak low, right? And that would mean that there is no more point of buying here. We just have to keep selling until the next market shift. Okay, so look, boss, we're just gonna keep selling. Yes, these are impulses created by the market just to confuse those traders who thought, oh, at that moment it was a bullish trend line. And as you can see, look, it respected the strong high, and then it will just keep going down and going down, right? So this will be again a lower low or a weak low. This will be a weak low, right? Weak low, we know that. What happened with the week lows are broken by candlestick. Okay, we just update, right? This will be another week low. Yes, correct. But look at, and then what happened? It was broken, but a candlestick wick. So in this point, we will see, oh, the price is likely to do end of a range. And that's what it did, in fact. Look, the strong high, keep going down, right? Then it made a swing low here. This is the lowest point of the market. The next candle is higher, and the candle of the left is higher as well. So this is the swing low. And then we will have here our swing high. That will be this one, correct? And what happened? From the swing low, from the swing high, the swing low was the liquidity was taken and then it kept going up. Excellent. This is a good analysis. Now, this is still a weak low. Doesn't make it a strong low. Why not? Why not, my friends? Why this is not a strong low? Strong. Why not? Simply because we already have a strong high. We're in a very straight line. And even though the market makes a complete range, or just like in this example we're seeing here, it doesn't mean that there is a market shift. No, a market shift is like this previous example. When we got a very clear range, right? And that range decided to end up with a break of structure, right? And this is what happened. That's why we say, oh, we just change our mindset. Now we just keep looking for opportunities to sell, and that's what we have done here. So people who thought after this price will keep pushing up, unfortunately, did not take into consideration that this was a very straight line, and then we keep going down, right? Until this point, okay? Until this point. Here the market really ends up. And we have, for example, if we have here a week low, let's keep going with this example, with this range, okay? And then when we have an end of a range, this is the same example as we saw in the presentation. So the beginning of a range, okay, which is this one, and then the ending of the same range. After this is broken by a candlestick body, we just have to update a range. So this high here will become our new strong high, correct? Now we will have here a boss. This week low, yes, it's a week low, but now it's the boss. It's the break of structure, right? Because if we bear in mind how to analyze or how to identify a range, remember that we first need to identify the swing high, the swing low. And in this case, the swing high is this part or this one, yes? And then the lowest part of the market is that one, correct? Now, this swing low takes the liquidity of the swing high and then it breaks with a body of the candle or the candlestick body, boss, all right? And then keep going down until certain zone, which is this one. And now from this point upwards, the same story. Now we have to analyze this. This will be again a weak low. This will be a weak low, right? Now what we have to do here is we just have to identify the pattern of the swing high and the swing low. Maybe you will be a little bit tired of listening to me saying this, but imagine if you're tired. Imagine me, I'm the one who's saying this. But repetition is the mother of all the skills, my friends. So if I repeat this once, you have to repeat it by yourself. Probably with your accent, with the way you would talk, it's all right, perfect. But you will get used to my voice, no problem. So if you haven't already done it. Now, liquidity, this is the swing low, right? Swing low. And then we have here the swing high. Perfect. Swing high. Now we will wait for the break of structure. Yes. Break of structure. Now, until this point, we may think that the price will keep going down, right? Because it's a very straight line, and that's 100% correct. But what happened after this? Remember, we will keep analyzing. This is a possible swing high, and this is a possible swing low. Possible, correct? What happened? We would say like, okay, Manuel, now we can update our chart, and now we can say that this will be the strong high because look, take the liquidity, sorry, like swing high, swing low, break of structure. Now this is again a strong high. And it will mean that we'll have to keep selling, right, Manuel? Not yet, my friends. Not yet. Why not yet? Because you would need, for this to be true, you would need that the market keep pushing down and then break this. If it breaks this week low, all right, this will be the strong high, but the new one, no, the new strong high, but it hasn't done it. So some people here just want to clarify this, okay? What happened in this point? But you say like, look, Manuel, it made the boss. Yes, it did it, but it doesn't mean the range is ended, correct? How and why do I know that? When we start like mixing the time frames and understanding why the market reacted here, because probably it is reaction in a demand zone of a daily time frame. So remember, high time frames determine the real direction of the market because we are retail traders. we just take a small portion of the market. It means that the price just went down what it needed to go down, right? And then it reacted to a zone in daily, monthly, weekly, and from that point upwards, it will keep pushing up. That, if you remember the whole picture daily, there we saw that it just keep continue up, right? So there is a reason. Excellent, guys. Now, just to update this range, the price keep going up. Here in this case, it took the liquidity with a candlestick wick. We thought it would be, we keep it selling, but no, at the end it break with a break of structure or with a boss. And what does it mean? Now this strong high becomes a weak high, and now what we have to determine is, we just have to look for our strong low, that it will be this one. All right, now this weak low becomes a strong low, right? And this one that was here is also a strong low. This is also a strong low. Perfect. Now you say, why, Manuel, why do you put this one here as the new strong low? Again, because I just have to update the price chart. I just have to find out here, for example, this will be the swing low, and this will be the swing high. Remember the theory. This is lowest candle, this is higher, this is the highest candle, this is lowest, took the liquidity, break of structure, and now we have here a weak high, which will be this one. Okay, perfect. Once the direction of the market, this will change dramatically. Okay, how you understand the real direction of the market, right? Well, wait, once you understand the ranges, and the market shifts when the ranges are broken, then you will understand the real direction of market, and that will be like an 80% of this practically, because you will at least determine the real direction. And that's what we need to know on this market. We just need to know, predict if this goes up or this goes down. If this will keep going up, you make money. If you don't, you would lose it. As simple as that. So my recommendation is, watch this video as many times as you can. Do as many examples as you need, so you guys get really precise finding, especially the beginning and the end of the ranges, and especially see how the market you're analyzing. In this case, I have the euro dollar, but if you have gold, dollar, or silver, or futures, or coin, or any other type of currency or market, just be patient enough, okay, to analyze it, and I have the time to practice this. That's it, my friends. That's it for today. Hope this was clear, and I'll see you then in the next explanation, because this just has started. Okay.
Hey guys, this is the end of the class. Hope you can do the homework I have assigned to you. And if you have any questions, don't put it in the comments. Please also, if you want, leave me a comment in my fan page on Facebook and also on my Instagram if you want to be updated about everything that I do day to day. Okay, see you in the next class.